Now, Michael, at the moment, the big story is Donald Trump and tariffs and the impact on global trade and maybe a trade war. What's your best guess on what's going to happen?
I think he's making an opening bid in a bargaining strategy. How unlike him. I think what's significant to me is that Speaker of the House, Paul Ryan, this morning has opposed these tariff increases. And that means it's not going to get into legislation. So if Trump wants to put up tariffs in the short term as part of a bargaining procedure, bargaining game, I think that's what he's attempting to do.
Now, one thing that worried a lot of people was that hiccup for the stock market where it had basically an overdue correction. And some people are saying, oh, this is the canary in the coal mine and get ready, there's going to be stock market Armageddon around the corner. Do you believe that's the case, or do you think this bull market's got more time to run?
Well, all most bull markets must come to an end eventually.
Yeah, we know that.
Yeah. But not now, and not this year. The US equities market and the Australian equities market is being supported by very strong liquidity positions in the US corporate market, US corporate debt market. So there's an enormous amount of liquidity in the US wholesale market. If we look at the risk premiums of US corporate debt, it's now fallen, just in the last quarter, it's fallen to the lowest level since 2006. Now you remember how strong liquidity in 2006 drove up the stock market at that time, both in the US and Australia. Now that's what's happening now. And that's what's happening this year. Now, eventually when the US economy slows down, that corporate liquidity will tighten up, but that's not yet.
What is your economic outlook, both for the globe and for the Aussie economy?
Well, the world economy is recovering. This is the first time we've had the US growing at the same time as the European economy accelerating. Probably the European economy is going to grow even faster than the US economy this year. We have the Euro area growing at 2.8% as opposed to the US growing at a very strong 2.7%. China's growing at 6.6%. A couple of years ago, India was slowing down. Now it's speeding up again. And the Australian economy seems to be lifting from about 2.5% last year to about 3% this year. So the world is a better place for growth this year.
So is the scary thing for probably next year is the rate at which the Fed raises interest rates? That could hurt the stock market eventually.
By the time we get to the middle of next year, we'll be equaling the longest growth cycle in US history since 1785. And hey, that was a while ago.
Yeah.
And the previous longest expansion in US history was 120 months. And that was actually under Alan Greenspan. So we'll be equaling that in the middle of next year. Now, statistically, the chance of we're now producing the longest growth period in all of US history, that's pretty low. So we're sort of, the numbers are rolling over.
May I interrupt? The fact is that interest rates have never been this low. Couldn't that be one reason why we could actually create the record?
The problem is the US economy has run out of people to give jobs to. Unemployment now 4.1%. We think it'll be 3.9% by the middle of this year. That's equal to the lowest level of unemployment in the last 30 years. That previously happened at the very end of the tech boom in 2000, and unemployment stayed in that level for about 10 months, but eventually the economy slowed, wages growth became very rapid, the Fed kept tightening, and the economy fell over. And so we kind of expect that kind of slowdown sometime next year.
Okay, so my summary of listening to you today, and I'm good at summarising you, Knoxy, is that you're not worried about the stock market in 2018, you'll become more cautious in 2019.
Yeah, that's pretty much it.
Well, as always, thanks for joining us, Michael Knox.
Thank you, Peter.
Nice having a cup of coffee with you.
Very good.